Today on the Tearsheet podcast.
Upgrade is a neobank based here in San Francisco, and we're really trying to deliver sort of great frictionless mobile banking to mainstream consumers, and really started with credit. I think that's one of the missing pieces of the neobank space in the US, and that's the number one reason why a lot of consumers seek a bank relationship to start with is obtaining credit. So we deliver sort of, what we think are really affordable and responsible loans and cards product, credit cards product.
Welcome to the Tearsheet podcast. I'm Zack Miller. When we launched our podcast 10 years ago, one of our first guests was a French entrepreneur living in San Francisco. He had a small but upwardly aspirational startup. Renaud Laplanche's LendingClub ended up becoming a major player in fintech as a public company and a force in the marketplace lending arena. Now Laplanche is back for more. He's the CEO of Upgrade, a new challenger bank that was built with lending at its heart. He joins me on the podcast to talk about the genesis story of Upgrade and how so much of his experience launching and growing LendingClub informs Upgrade's products and positioning. We discuss how the current COVID-19 crisis is impacting the industry for both incumbents and upstarts, and how Upgrade's new products, a contactless credit card that has built-in pay-over-time features, play into today's market dynamics. Renaud Laplanche is my guest today on the Tearsheet podcast.
All right, my name is Renaud Laplanche. I'm the co-founder and CEO of Upgrade. Upgrade is a neobank based here in San Francisco, and we're really trying to deliver sort of great frictionless mobile banking to mainstream consumers, and really started with credit. I think that's one of the missing pieces of the neobank space in the US. And that's the number one reason why a lot of consumers seek a bank relationship to start with is obtaining credit. So we deliver sort of, what we think are really affordable and responsible loans and cards product, credit cards product.
And how do you think that the challenger banks, other challenger banks, maybe miss out on the credit piece?
I mean, if you look at credit, it's 70% of banking revenue globally and in the US. So it's really an essential piece of banking. So if you're going to create a bank, whether it's a neobank or traditional bank, you need to have great credit products, both for revenue purposes and also just to meet your customers' expectations. But I think credit is a lot harder to put together than debit or payments product. So I think a lot of challenger banks in the US have understandably started from the debit or payment side with plans to go into credit going forward. But credit is hard, frankly. I mean, in terms of underwriting and servicing, also just in terms of capital. Right? Just sourcing the capital to deliver billions of dollars of credit is not easy, and you need to either build your own very large balance sheet, which sort of breaks away with a more like capital light fintech model, or you need to implement a marketplace model by selling loans and card receivables immediately to investors and loan buyers. But that takes a track record that you can only build over many years. So I think credit takes time. So I'm glad we started with credit. It was also our experience prior to Upgrade. I founded LendingClub and ran it for 10 years. I think it was a bit easier for us to start from credit, build the track record, and then expand into debit and payments product.
And how much of your experience, founding and running LendingClub, I guess, is embedded in the Upgrade model?
Wow, a lot. As you can imagine, I learned a lot, and the team learned a lot over more than 10 years running one of the largest loan provider in the US. So yeah, I think we were able to basically quickly ramp up loan production at Upgrade. So we've done already billions of dollars in loans after 2.5 years. Really because we had that experience, and we had a lot of relationship in the space, and really a lot of personal track record that sort of helped us ramp up production quickly in a way that delivered great credit performance to investors.
So I guess in your earlier answer, when you talked about the challenge of starting with credit, I mean, sort of talked about market dynamics. How about from a product perspective? What does a product look like, or how does it differentiate from other challenger banks when it starts with the premise of credit?
So a couple of things. I think one is in terms of target customer base. I think when you start with credit, you do a lot more underwriting. So you choose probably your target market a little bit differently for that reason, right? You're immediately focused on customers who are credit worthy. So our customer base is probably more mature than a lot of the other challenger banks. So upgrade customers are 42-year-old on average. There's a lot of disparity around the average, but the average is 42. The credit score is 700. The average individual income is $90,000. An average household income is $130,000. So unlike a lot of the other challenger banks, we're not focusing necessarily on the millennial population or any population that hasn't fully adopted traditional banking services. We're focusing on a more mainstream, more mature customer base who often banks with Wells Fargo and Bank of America. And we're just offering them a better experience and just a better deal and more affordable and more responsible credit product. So I think the credit really influences how we think about who our customers are. It also informs how we build products. So I think the most innovative product we put together is Upgrade Card, which is I think everything a credit card should be and hasn't been for 4 decades now. It's a credit card that can be used at any point of sale, online or in store. It comes with a line of credit. At the end of the month, the balance on that card turns into an installment plan that you can pay off over 1, 2, or 3 years at a fixed rate with fixed monthly payments. So it really has the flexibility and the convenience of a credit card, accepted everywhere, and where you get credit on demand, get as much credit as you need when you need it. But then it doesn't have all the high cost, high fees, and really all the traps of credit cards, right? I mean, credit cards on average come with a 17% interest rate. There are a lot of fees on top of that. But the worst feature of credit cards is if you only make the monthly minimum payment, it's going to take you 25 years to pay off the balance. And you'll end up paying back 3 times what you initially charged on the card. So that the upgrade card really gives you the discipline of paying down the balance a lot faster with an installment plan. So the rate starts at 6.9%. So it's a lower rate to start with, but then the cost ends up being a lot less because the lower rate and you pay off the balance faster.
Interesting. And can you take us a little bit through, I guess, the product development cycle there? Like, where did the idea come from? What were some of the challenges in creating this card? Because it is innovative and kind of combines a couple of trends, we've been talking about on the podcast for the past couple of years.
Right. So, I mean, it really came from our desire to deliver affordable and responsible product, right? That's our mission. And what we have done with personal loans, a lot of the personal loans we made at LendingClub or recently at Upgrade were designed to pay off and refinance an existing credit card balance at a lower rate with monthly equal monthly payments. And so we thought, okay, what would it look like to launch a credit card so that people never have to refinance again, right? Instead of refinancing credit cards, what if we were replacing credit cards? We move like upstream and directly acquires a balance at the point of sale. What would that look like in a way that's affordable and responsible? So we came up with this product that's sort of a hybrid between a credit card and a loan, and gives you, again, the flexibility and convenience of a card, but the lower cost and more responsible credit feature of an installment loan.
And you just came out with a contactless version as well?
Yes. So we were always thinking we'd go contactless at some point. We sort of accelerated that in light of the COVID-19 pandemic. So we actually launched two features. One is a contactless version of the physical card. So it's just a regular sort of EMV chip, but with RFID technology and NFC protocol, so near field communication. So you basically need to be a couple of inches away from the reader. You don't have to insert the card. So you have really no contact with any surface that could be transmitting a virus. And then at the same time, we also finalized the process with Google Pay and Apple Pay to register the card. So every upgrade card customer can now register their upgrade card with Apple and Google and use that for mobile payment. So same technology, NFC protocol, and no need for any contact there.
So that's interesting with the contactless card, the contactless piece, and that you accelerated the product dev to get out to launch into the market now, given the COVID-19 dynamic. I'm interested in hearing given your background and how much you've seen in the industry. Like, what I guess how you would describe this era of banking. Like, what's changing? Like, is this a permanent change? Do you see? Are we going to go back to a normal? Is there a normal now, or can you, I guess, give us your perspective on sort of what financial services looks like now?
Yeah, no, it's hard to tell. It's all happening in real time. But I think that there are going to be. I mean, in every crisis, I think we all learn something new. And I think a lot of people today are learning to work from home. And I wouldn't be surprised if more people end up working from home in the future.
Even in the banking industry?
In every industry. Yeah, I think a lot of people now, especially in our customer base, like a more mature base that hasn't yet fully adopted online banking, but is slowly converting from regular traditional banking to online. I think they're getting used to the fact that, okay, yeah, maybe I don't need to go to the branch anymore, and they're learning to bank from their home or later their workplace and save that trip to the branch. So it's obviously safer in this environment, but it's just generally more convenient in any environment. So I think that's going to be here to stay. I think in terms of payments, people have to move away from cash. I mean, banknotes are the worst in terms of transmitting germs, and not just this virus, but any virus. So I think people are going to move away from banknotes, from cash, and I think we'll see a broader adoption of card, but also mobile payments. I think mobile payments have been here for many years now, and it's been a slow adoption in the US because cards were so entrenched. But now that you can register a card into your mobile phone, there's really no reason to carry both a card and a phone.
And what about these traditional financial institutions that were sort of stuck in between two worlds? They're definitely shrinking their branch footprint, but they haven't quite fully gone all in digital. Like, where does that leave those financial institutions that are sort of in no man's land?
Yeah, it's really interesting. A lot of banks have gone with smaller branches, but haven't really cut down dramatically on the number of branches. I think that's going to happen now. I think again, where people are now getting used to banking without going to the branch, and I think that's going to trigger a really sort of long-term trend of fully sort of digitalized banking.
Let's shift back to Upgrade. I'd love to hear more about what you're thinking about in the future in terms of product development, what some of your goals are over the next year or so.
Yeah, so we will continue to roll out new products and continue sort of penetrating the market with existing products. Upgrade Card launched recently, just 6 months ago. In March, we were already at $500 million of annual origination run rate. We have a goal of about $1 billion for this year. So we see really people adopting the card very quickly. It's really the only card that gives you credit when you need it, but then doesn't push people into that revolving debt cycle trap that so many families are falling into because of the way credit cards work. So we think it's a great product. It's going to continue to be adopted. We'll be launching later this year what's called Upgrade Account, which is our full mobile banking experience that combines sort of great sort of rewards and then no fee and a lot of value for consumers and families with sort of access to credit and affordable and responsible credit products. I think it's going to be a really sort of key development for us in continuing to build a bank, a challenger bank that delivers great value and a great experience online, but including really chiefly credit products that people need.
I have a follow-on question there, Renaud. We've seen Credit Karma and Credit Sesame also move into kind of banking and bringing their sort of core personal finance management tools, credit management tools into banking. How important is it for Upgrade in terms of providing sort of analytics around borrowing and stuff like that for your customers?
Yeah, I think it's great. I mean, I think you'll continue to see a convergence of a lot of these platforms. I think the fintech really started with companies like first generation of fintech companies like LendingClub and Credit Karma and others doing like one thing and doing it really well and going very deep. I think now you're seeing sort of second generation of fintech companies or first generation really sort of broadening the scope of their operations to include a variety of services, including sort of credit, payments, debit, deposit, savings, tax. So there's, I think you see continued trend of fintech companies providing the entire range of banking products and services that one needs in their financial lives.
But what about for Upgrade customers? How important are sort of the credit health kind of component to what you do?
It's pretty important. So I think Credit Health is our free sort of credit monitoring and credit education product. It includes a lot of tips on how to manage your credit as a credit score simulator that a lot of our customers use. So our customers, 25% of our customers use the credit simulator at least once a month. So it's very high engagement rate, and it really helps customers basically simulate the financial impact and the credit impact of financial decisions that they're making. And as you know, I mean, the credit score is very opaque. It's often not intuitive in the way it moves up or down. So being able to simulate that and then being able to know what's going to happen to your credit score if you make an extra payment on your mortgage, or if you pay off a credit card, or if you close a credit card account, it's really a great tool to have. And so we hope to continue to give our customers more visibility into their own data and into how their sort of financial decisions are going to impact their financial life.
That makes sense. Renaud Laplanche, thank you for joining us on the Tearsheet podcast today.
Thank you. Great to be.